Well, good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Wednesday, March 8th, 2023. And our top story today, could sustainable investing for retirement increase or decrease your investment? And joining me now to discuss this and a lot more, Bob Colley is with Colley ESG. Bob, always great to see you. Thanks so much for joining us this morning.
It's great to be here, Jeff. Haven't spoken in a while. It's good to talk.
It has been a little bit of a while, and you're actually joining us from the States. So you're no longer, right now, you're not in England, you're in the United States in the West Coast.
That's right. It's a split personality. I'm half American, half English, so you never know where I'll be next.
Well, that's awesome. And I hope you take advantage of everything and you have a nice vacation or whatever you're doing. All right, Bob, I want to ask you the question that is often asked. You probably hear it from your clients. I hear it indirectly through reading articles. Could sustainable investing for retirement increase or decrease your investment? And I want to get your reaction to that statement and get your thoughts on this.
That's a question that I'm sure you've asked about every topic that you've had, whether it's this theme or that theme, going, small cap, large cap, whatever it is, going back as long as you've been doing these programs. Every idea that comes up, is it going to increase your returns or not? And as you know, the way markets work, as soon as somebody's figured out a pattern, that's in the price. And so we can look at history and say over certain periods of time, it's been a really good idea to invest in oil stocks. And at other times, it's been a really bad idea to invest in oil stocks. And that's partly to do with the cycle of the industry, and it's partly to do with markets price new information eventually. They don't do it instantly, but markets are pretty efficient. And they're good at putting price in. There's a lot of new information coming out about ESG right now. So anything we learn about looking at the history of the returns from ESG, that's going to be different going forward because the market is increasingly putting that stuff into the price.
Well, Bob, there's a lot of negativity and a lot of protivity on the issue of ESG and sustainable investing. We're not going to wade into the politics here. I think that's kind of below our pay grade. We want to talk about things that we can actually look at that are substantive. I want to ask you something you mentioned and really appeals to me, which is any investment that you or a particular individual is going to invest in, he or she is going to ask that question to themselves and to their financial advisor. Does that asset class, does that particular investment mean it's going to increase the value over time?
Yeah. And so with ESG, I think we're going to find periods when it will deliver better returns, and we're going to find periods when it delivers worse returns. And part of that is the natural cycle. Part of it is just that as things happen, like the war in Ukraine, no one really anticipated that. Suddenly oil prices go up. That's going to help oil stocks in the short term. Long term, that might not be the pattern that's happening. And so we're going to see ups and downs with ESG investing. The one thing I want to say about ESG investing, which applies to absolutely every investor. So whether you're very environmentally conscious as an individual, whether you think it's all a load of kind of overstated nonsense, wherever you sit on that, the one thing you have to realize with all of these factors is that they are financially material now. And so depending on the company you're in, it might be how efficient are they at using energy? Are they generating a lot of carbon emissions? Or it might be social factors. It is the board made up of a wide range of individuals, gender diversity, racial diversity, and so on, is the board. Does it treat its employees well? This matters financially. It's not just an issue of, I feel good about investing in companies that treat their employees well. There's a financial impact from how companies treat their employees. And so in that sense, ESG investing isn't something that's kind of sitting over here as a different way of doing things. Increasingly, every investor has to ask themselves, how is this company interacting with the world around it? Is it environmentally sound? Is it socially sound? Does it have good governance? And so more than this question of ESG as being somehow a new theme that's going to generate better returns or worse returns, it's a realization that there are a lot of other factors that we need to start taking into account when we assess any investment.
But really great points, Bob. I want to ask you about evaluation, and you talked a little bit about, we have talked numerous times about transparency and data, and that seems to be changing. I know you look at the European Union, you look at the States, I think everyone's, the United States, they're looking to get more transparency or provide more transparency, develop standards. That being said, how do you evaluate the fund performance over time? Because in any new market, there's got to be an evolution. So how do you do a comparison with limited information today when you do that 5-year look back that is so famous in the investment world?
That's right. And so the point I think you're raising here is that I mean, on the bottom of every investment, there's the disclaimer, and it's true. This isn't just kind of words that you're required to put there. It's absolutely true that past performance doesn't necessarily tell you anything about the future. And it certainly doesn't tell you, if something's doubled every year for 5 years, it definitely is not telling you that it's going to double every year for the next 5 years. So you have to look at any historical data with it's meaningful. It tells you something. It doesn't tell you the whole story. And that's doubly so when it comes to something like ESG, where the landscape has moved so quickly. So, 5 years ago, what the ESG investing involved was basically trying to work out what information you even had. You were working with a very limited data set. Now, we're still not where we want to be, but there's much more data available. You have a better idea of what companies are doing, what their policies are, how they're approaching these questions. And so what was happening 5 years ago isn't really the same market that we're dealing with today. And so that track record from even back then is even less meaningful in this space than it is for any other investment.
Yeah, Bob, I want to ask you, the debate that you and I have been a part of for, I don't know, since the beginning of investing, active versus passive. Is this an example where the manager, because it's a evolving market and there's not as, the information that I have may be very different from the information that you have as an investor. I think the market's trying to change that, but it's taking time. Is this an area, and I don't want you to say whether one is better than the other, where active could have an advantage over a passive or index product because it's so new?
Yes, and the thing with active and passive is not, is one better than the other? The market needs and benefits from having the choice of both, and for some people, one's better. For other people, the other one's better. So I'm not going to jump in that one or other is always better, but it is, when it comes to that mechanism that I've spoken about of putting the information into the price, it is the active investors that do that. The passive investors are stabilizing prices, but it's the active investors are saying, oh, this particular theme is overpriced or underpriced in the market, and they're the ones who take the new information and put that information into the price. So that's the role that the active community plays, and it's a good role. The market needs it. So definitely, yes, that's when you have a changing landscape like this, active investment, it is definitely key to making that work.
And the investment industry really has changed. I mean, when I was growing up in this industry, there was always these, and it's still to some extent the case, but there are always like these asset managers, these portfolio managers who were heralded as the next great thing. I'm not going to name them, but we've all heard them over the last 30, 40 years, maybe even longer. But really now, with the need for all data and the need to use analytics, it's really a team approach. So the fact of the matter is Bob, even if you're the biggest pension fund in the world, which I think is a Japanese pension fund, you're probably not going to be able to meet XYZ company's entire team, the 100+ analysts that are covering ESG, covering a particular sector of the sustainable investing landscape.
Absolutely, but this is just about every industry, or every large industry. The degree of professionalism, that the approach that's being taken, it's evolved so much over the last 30 years, the last 50 years. It is just, the investment world is not what it was, and there's still a lot of room for human intelligence, but it's human intelligence using machines. Some of the things that used to give you an edge in investing, the machines have taken that over. The machines also open up new ways in which humans can develop an edge. So it's still a human game, but it's a humans plus machines now, as opposed to humans or machines.
And Bob, that is an interesting topic that I want to bring you back for maybe next month. We could talk about the use of artificial intelligence. That would be an incredibly interesting conversation beyond just sustainable investing. But Bob, I need to take a very quick break. As you know, we got to pay the bills somehow for this network. We come back, we're going to talk about whether ESG and sustainable investing will solve all of our problems. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you stuck with a low credit score? A credit report and score that's causing you to be denied credit or pay higher interest rates than others for the same things? Then do what Terrence did and call Credit Repaired for your free credit evaluation to help restore your credit.
I started thinking about buying a new house, and my score wasn't where I needed it to be. I called and spoke with one of the representatives, and we just had a good conversation, and I liked what he was saying.
Just one call for his free credit evaluation was all it took to start back on the track to repairing his credit.
I'm seeing the deletions and I'm getting the report, so I know something's being done. It does make a difference to me.
All it takes is one call to get started.
Credit Repair has given me a second chance to have a better credit score.
Don't let a low credit score hold you back another day. Do what Terrence did and make the call for your free credit evaluation.
Call 800-819-4152. That's 800-819-4152. Again, 800-819-4152.
Welcome back. We're joined this morning by Bob Colley of Colley ESG. Bob, thanks so much for sticking with us this morning.
It's great to be here.
All right, Bob. You know, a lot of people, we had a great conversation about investing, whether or not the investing in sustainable investing can have a material effect on your retirement and your long-term investing. That's something that people need to consider. I want to ask you about, just stepping back, is ESG and sustainable investing, is that going to solve all of the world's most pressing problems? Fuel, energy, war, inequity. I mean, I could go down the list. We don't have enough time for me to go down the list of all the problems.
On its own, obviously not, right? But what it is part of that. So I think, if you want solutions, the single biggest lever that we have as a society is governmental regulation. Right? Government can't fix things on its own, but it sets the rules within which companies play. And so that is huge determinant. So government, single most impactful part of the system. But then you have corporations. What are they doing? How are they behaving? Incredibly powerful. And yes, they react to the regulation, but they also set the tone themselves. So that's the second part of the picture. Then you have investors, because they set the rule, or they don't so much set the rules, that they set expectations for companies. They say, this is what we're looking for. This is the kind of data that we care about. And then individuals, we're fourth on the list, which is not nothing, and we can influence governmental behavior, we can influence corporations, we can do investors. So if you want a hierarchy of who's going to solve the big problems, it's all of the above, but investors are in there. ESG isn't going to solve everything on its own. It has to work with companies, has to work with individual investors. So complicated answer, complicated system, but really everyone plays a part. ESG investing is a part of a big change that's happening in terms of how we're approaching a lot of these questions.
And Bob, you talked, I agree, it's not simple, although we all like 0 to 1. I love simple answers, as my wife will tell me regularly, by the way. Let me ask you, businesses, we talked about this in segment 1. Businesses have really played an important role in changing their business practices, and mostly it's mid to large size companies, but they have really adapted some of these sustainable and ESG type policies into their regular business practices. So that really has a material effect on how they do business, how they treat their workforce, how they produce their product. That seems to me an even more powerful way of dealing with some of these pressing issues, is that the businesses are really taking a big lead here.
That's right. And you could argue whether they're only doing that because it was consumer expectation or regulation or whatever. So that you could say, well, they're only doing that because they're reacting to the landscape. And that's absolutely true. But that's how markets work. When people want something, companies respond. And when companies offer something, people decide, do we like this? Do we not like this? And so there's this constant cycle of kind of adjusting to the other parts of the system. And so, yes, what we're seeing, I think, is companies realizing just how much consumers care and how important it is for the planet when it comes to some of these issues as well. That behavior that we didn't even think about as being damaging 30, 40, 50 years ago, we now see, well, it is damaging if you don't respect the environment, if you're not going about how you use plastics, how you use carbon and so on, in a way which recognizes that this is having an impact beyond what we're doing here and now, then we're going to cause or continue to cause really big problems for the world. It's natural that you say, we now know this, let's see how we can change our business practice in a way which is more consistent with the type of world we want to leave for our children and their children.
Bob, a lot of the businesses that are leading here in the pack tend to be larger corporations, mid-sized corporations that have the resources. How about at the lower end, not in a denigration type of way, but just smaller businesses? How can they get involved? Because I know you're a small business owner, I'm a small business owner. It's tough to wear 50 different hats, one of which is how do we provide a more sustainable product or service, right? I mean, it's tough, but most people, at least here in the United States, are employed by smaller businesses. So it would seem to me that it's great to have these big multinational corporations and big entities doing it, but how do smaller businesses get involved as well?
It is amazing the extent to which small things add up to something big. You'd say, does it matter if I put my glass bottle in the glass recycling bin as opposed to the regular garbage? Right. Is that really going to make a difference? Well, in and of itself, maybe not, because it's one bottle out of however many millions are being recycled every year. But me doing that is a habit. It affects them because other people see me doing that. Subconsciously, it affects what they do. So you're part of society changing. We each have a responsibility to do what we can do. And so for the small corporations, where the opportunities are to use greener methods of approaching things, whether it's using just less paper, and we're all using less paper now than we used to, right? And that, whether that was a conscious decision or not a conscious decision, and some people are doing it because they decided we need to use less paper, let's change these practices. That then has the effect of making other types of reading material available so businesses respond. And then once that's available, well, everybody else now has a choice. Well, do I want to use paper as well? So every time you take one action, it's setting the tone for a whole lot of other actions. So it's this interconnectedness of the behavior that we have, which means that even with the small businesses, what they're doing is actually feeding into the bigger picture, and even having that mindset of, I'm part of a bigger society. Am I being a responsible citizen? Which we do automatically as individuals, right? If you see somebody that needs help with their shopping or something, you don't just say, well, it's nothing to do with me. I'm not going to help you. As human beings, we're trying to help other people as individuals, applying that same mindset to our corporate lives and saying, can we be good citizens as a company, whether it's a large company or a small company? That's a valid approach to life as well, and I think a better one.
Bob, and just to go back to something you mentioned about the efficiency of the market, I mean, markets are efficient, but it's messy. It's not, it's not a perfect system. In fact, we're human beings, so I don't know of any perfect market out there. I mean, I would argue that even the large corporate market, large cap market is not as efficient as everyone thinks it is. Yes, there's reporting. Yes, there's information. But the reality is, in any market, there's going to be inefficiencies. Those inefficiencies get pushed out over time, but it's not a straight line from the beginning to the end.
Oh, we could talk about that all day, that this analogy that people sometimes use of the market is like this machine and it's got this algorithm of formula. That's not how the market works. The market is like a jungle. It's nature. It's a living entity, and it behaves. So yes, it's kind of efficient, but it's not efficient in the way that the academics will say it is at all.
Yeah, well, that's another show we should do, Bob, because I think it'd be great to kind of step back and talk about efficiencies, maybe a little bit of an economic lesson. Bob, we're going to have to leave it there. Always great to see you. Enjoy your trip on the West Coast, and we look forward to having you back on the program again very soon.
That's been great. Thanks, Jeff.
And that wraps up this episode of BRN AM. Have a topic of interest, somebody you think we should talk to, drop us a line. And don't forget, for all the latest curated news in lifestyle, wellness, finance, tech, so much more, all in one place, check out today's edition of our daily newsletter, The Morning Pulse. Want to search our archives, check out our latest content, we'll visit our website, and of course, all of our streaming partners. We're back again tomorrow for another edition of BRN AM. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes. Now is your opportunity to co-create content around any topic on the first lifestyle and wellness network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.
Tax audits, tax liens, wage garnishments.
Every day we hear stories like this about good folks who are simply struggling to pay their bills. Each of them are living a frightening IRS tax nightmare, and they are afraid it will destroy their lives.
I'm a divorced single mom, and my ex-husband left me and the kids with a lot of unpaid bills, including unpaid taxes. I was really starting to show my stress on my kids because the IRS had sent me a letter demanding a huge payment from me. I couldn't afford it. So then the IRS was threatening to garnish my wages. I'm already living paycheck to paycheck. That would have put me over the edge financially.
It truly seemed hopeless, but then a friend at work told her to call the tax relief line.
The people at the tax relief line, they told me about something called innocent spouse relief. They worked it out so that all of the taxes from my ex are not my problem. I don't know how that works, and I don't care. All I care about is that I don't owe the IRS a dime, and they are not going to take my paycheck.
Even if it seems hopeless, you should call the number on your screen right now. There is absolutely no cost for the call or the consultation. You are under no obligation. If you are worried that the IRS could garnish your wages, seize your assets, even take your home, call us right now. The Tax Relief Line is here to help you. Now you have a knowledgeable, professional team of tax experts that are ready to negotiate with the IRS and fight for you to save you money. The Tax Relief Line's professionals have successfully negotiated thousands of cases, reducing and sometimes even eliminating the tax debt for their clients. It's very easy to get started. Simply call the number on your screen right now. You don't have to live in fear anymore. The call and the consultation are free.